Hey everyone, SoundHound AI stock is hitting a bit of a rough patch after starting the year off incredibly hot. The stock is down 9% in the last 5 days and 11% in the last month. So a lot of investors are asking, is this a buying opportunity for SoundHound AI stock? Should you buy the dip in this drop in SoundHound AI stock price? Well, I'll answer that question in this video. I'll also discuss a little bit about why SoundHound AI stock has hit a bit of a rough patch, and then I'll answer if I think it's a buying opportunity. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, like I mentioned at the top of the video, SoundHound AI stock is down 8.87% in the last 5 days. And if I go back for the last month, it's down 10.85%. A bit of a rough patch for one of the hottest stocks in the markets today. Still, if you look at year to date so far in 2024, SoundHound AI stock is up over 153%. That's an incredible gain for one stock. It was up significantly more than this, but given the recent headwinds, the stock price has come down a bit. And the primary reason why the stock price is down, in addition to an incredibly high valuation, is a short seller report. So there was a short seller report published by Capybara Research on Tuesday. In the report, the company said that it believes Houndify was a commodity product with unremarkable technology. The short seller indicated that SoundHound had no real advantage compared to resource-rich competitors including Amazon, Alphabet, Microsoft, and hiding the loss of customers including Netflix, Mercedes-Benz, and Deutsche Telekom. Cabrera said that it believed SoundHound AI stock was worth $1 per share or less. $1 per share or less. That's a significant decrease from SoundHound AI's current share price of $5.38 as of this recording. So that short seller report had some investors a little bit cautious about SoundHound AI stock. Now, I don't pay much attention to short seller reports, and I also don't pay much attention to recommendations like when Cathiewood makes a recommendation saying that she believes Tesla stock should be worth $1,000 per share or $2,000 per share. I don't pay much attention to those conclusions because they're just talking their book, right? Cathiewood owns a significant amount of Tesla stock in her portfolios that she manages. And of course, she's going to talk up Tesla and try and boost up Tesla shares because she owns them, right? It's in her benefit to hype up that investment. So I don't pay much attention to her discussions about the stock and the valuation. Similarly, I don't pay much attention to this type of short seller report because this company is short on SoundHound AI stock and they want to make the stock price go down. That's how they will make money. Of course, they're going to produce research and talk about how they believe the stock is overvalued and the price should go down. So all of that being said, regardless of these opinions on the outside, I've conducted research myself on SoundHound AI stock, and over several instances, I've said that I did not believe SoundHound AI stock was a buy. I've been telling investors all year long that I felt SoundHound AI stock is a bit overvalued. It's gotten a bit ahead of itself. Of course, it's an excellent company, and I'll share with you its excellent results in the latest quarter, but I felt that it gotten ahead of itself. Well, of course, if you listen to my recommendation, you will have missed out on those significant gains as SoundHound AI's price moved higher throughout 2024. Regardless, I've just felt, looking at the company's fundamentals, that it was making great progress and it was in a good position to benefit from the rising effectiveness of AI, but the price was just a little bit rich. In fact, in the latest quarter, I was really impressed with how the company increased revenue by 80%, while at the same time decreasing operating expenses by 23%, I should say. In particular, decreasing sales and marketing expense by 34% in the latest quarter. That's hard to do, to grow revenue by 80% while decreasing sales and marketing expense by 34%. That's impressive. That demonstrates organic demand for your product, right? And so that's what I was impressed with. And the company's operating loss shrunk from the same time last year by more than half, from 28.9 million down to 12.393 million. So I admitted all of that. The company was doing great, heading in the right direction, shrinking losses on the bottom line. All of that was great, but the valuation was just so expensive, right? The valuation was just so expensive. Prior to this decrease, SoundHound AI stock was trading at a forward price to sales of over 24, closer to 30. Even now, at a forward price to sales of 16, is quite rich for a company that's still losing money on the bottom line. Yes, they're growing nicely, but they're still losing money on the bottom line. And management said they're going to get profitable, but not until the end of 2025, and that's only on adjusted EBITDA terms. Let me share that with you. So here's management's outlook for 2024 and 2025. For 2024, they expect revenue to grow from 63 to 677 million, or a midpoint of 70 million, and then they expect that to increase by another roughly 50% to 100 million in 2025, which in that year they expect to be positive on adjusted EBITDA basis. Now remember, EBITDA stands for earnings before interest, taxes, depreciation, and amortization. So EBITDA itself is an adjusted number to make it easier to report profitability. And then SoundHound is going to adjust that adjusted number to demonstrate profitability in 2025. So it's not truly going to be profitable on the bottom line. It's going to be profitable on an adjusted basis, seeking out or excluding several costs so that they can report profitability. And that is only just slightly, right? They're just saying it's going to be positive. So that just might be slightly positive, like 2 or 3 million on revenue of 100 million. So it wouldn't be huge. It will be moving in the right direction, but it's just that movement in that direction is not fast enough for me to warrant this kind of a valuation. And then if you look at cash flow from operations, that too is improving from a loss of 94 million in 2022 to a loss of 68.265 million as of December 31st, 2023. But again, it's moving in the right direction, but it's still significantly negative, and it's not moving in the right direction quickly enough for me to warrant this kind of a valuation. So for me to update my recommendation for SoundHound AI stock, I'm still not recommending it as a buy. I don't think this dip is a buying opportunity. I still think this stock is too expensive. I think they need to demonstrate more progress and grow themselves into this valuation before I could recommend it as a buy, or the price has to decrease significantly more to earn a buy recommendation. So for now, this is still an excellent company that's already pricing in a lot of its excellent prospects for the future into its current valuation. So I'm saying it's not a buy on this dip here. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.